And when we look at the median selling days, this really tells the tale of what's been the last year. So across when we hit September last year, that's when we were at one of our tightest markets with just 8 days, the median for how quickly properties were getting sold. So over the last year to December 24, where we have the ABS data to, we had the highest population growth by percentage terms, still at 2.4%. Still good value buying, and we've got solid rental yields on offer, but you definitely need to be selective. Push your budget to the middle or top end suburbs, which will experience, in my forecast, the most growth over the next 1 to 2 years.
Welcome to Perth Property Insider, where you will learn how to grow your wealth and improve your life using Perth Property. Our show is brought to you by Investors Edge Real Estate, the highly rated and award-winning property management, sales and buyers agency servicing the whole of Perth. Now, here's your host, Jared Mann.
G'day and welcome to my Perth Property Market update for September 2025. I'm calling it the tightest market ever because it absolutely is, and things have just gone next level. I'm going to take you through what exactly is happening in the sale market, the rental market, the things driving all these factors that are affecting our market, and what I've got in my crystal ball for the year ahead. So stay tuned. This is going to be an exciting Perth property update. When I look at the sale market, as I alluded to there, we've got the tightest supply with just 2,386 properties for sale. That's a 40.4% decrease in the number of properties for sale since the same time last year. Super, super tight. Now, we were starting to see this trend up across January and April quarters. I started to see it tightened going into the June quarter, and I've really seen things pick up over the last 4 weeks, which has really driven this supply even tighter. We've got a decent number of properties getting sold per week still, with typical levels lately being around 800, 830 properties per week. It's a 1% higher than the typical transaction volumes at the same time as last year. So we had 40% properties more on the market last year, and we've got similar level of properties being bought every week. So that's why the total supply is getting driven down and taken up by all these similar levels of purchases. The sale inventory, as a result, has hit one of its record low levels at just 0.72 months of inventory available, a 40% decrease on the same time last year. And as a result, our median house prices continued to increase. We haven't really seen the full effects of the most recent tightening over the last quarter yet, but it has gone up since I last came to you. I think we were at 780,000 in June. We're now at 800K, and that's gone up from 700K a year ago. Doesn't really reflect what's happening in every suburb, certainly doesn't, but you need to look case by case at individual suburbs. There's very big variety of growth levels that's going on in Perth at the moment. When we look at the unit median price, it's gone from 469,000 a year ago to 555. So a decent jump there, but the gap's still very big between houses and units. So definitely opportunity within units if you're selective. The land price has gone up and had its first sort of real big jumps over the last years, gone from 289K to 369. And that's really a result of the appetite starting to become more open to buying land and building. It's still not viable for most people to develop properties yet, just because the costs of subdivision and building have gone up by so much over the last few years that established prices still need to go further ahead before it's going to make sense. And when we look at the median selling days, this really tells the tale of what's been the last year. So across when we hit September last year, that's when we were at one of our tightest markets with just 8 days, the median for how quickly properties were getting sold. Then started to drift up, and we hit sort of 13 days in the March quarter. So not much of a change, but it was noticeable to us who were on the ground. And then it started to tighten up again over the last 2 quarters, and we're back down to 11 days. So I think it was about 10 days last quarter, about 13 days. Now we're at 11 days. Now, the Perth rental market has also continued to hold its own. We've got 2,261 properties for rent. It's seen a marginal 11% increase since the same time last year. But really, that's just super tight rental market. We've only got 17 properties for rent out of our 1,115. So we're very tight as well. Very few tenants are changing over just because of how hard it still is in the majority of suburbs. When we look at the median rent for houses, we've hit the new milestone of $700 per week. So we hit a milestone for the sale market. We've also hit a milestone for the rental market at $700 per week. That was up from $685 when I came to you a quarter ago. It's seen a 7.7% increase over the last year. I expect that it'll continue at a similar sort of pace over the next year. Our median rent for our portfolio is at 660 per week, so we're continuing to trend up and get closer to the median as we increase rents on our properties that we manage. So the rental inventory is still showing as very tight as we'd expect, with 0.92 of a month, unchanged since September last year. So even though we've got slightly extra supply, we've also got more properties being taken up per week, which has left that inventory unchanged. Now, when we look around the country at the property clock, the only change since I came to you a quarter ago is Sydney, which has moved around into a starting of recovery. Perth's still labelled as a rising market, Melbourne still declining market, Adelaide as a rising market, Brisbane as peak of market. So really, Perth represents one of the best opportunities still with rising market and relative to wherever the other capitals are at. So units, when we look at Perth, still a rising market for units. Sydney's moved around into a bottom of market for units since I last came to you. Melbourne's still in a declining market for units. And we've got Brisbane as approaching peak and Adelaide's still labelled as rising market. When we take a look at the Core Logic Index, it gives us a feel for what's actually been happening across the capitals. And it's usually a bit more accurate than just looking at a median house price. So in the last 3 months, Darwin's done 5.6%. That's got a rocket up at the moment. Plenty of investors going in there and pumping things up. And I'd be pretty worried about still, it could drop just as fast when people start dumping things out of there. So it could be a very volatile market when it comes off. Perth, we've had a 2.6% change in the last quarter, which is the second highest of all capitals. So we're back in the hot state relative to the others. When we look and compare that over the last year, Perth didn't actually do as great a growth in the last year to September. So when we dance through these capitals, 8.5% for Darwin. Then there was Brisbane with 7.3% over the last year, Adelaide with 7%, and Perth with 6.5%. That's really reflective that in 2024, the majority of the growth came across the first 9 months of the year. And then when we hit September, like I mentioned, things started to really quieten down. We had our 2 elections. We had interest rates starting to bite. I think we also just needed to take a bit of a pause, like breathing and breathe out for a bit before we could start breathing back in. And when the interest rates reduced a bit, when the first home buyer incentives turned on, that's really kicked up the lower end of the market, which the first home buyers are now driving the lower end, whereas last year it was mainly driven by investors. So we had a bit of a transitionary period handing over the baton, if you will, from investors to first home buyers who are now driving that lower end. And we're seeing a lot of the people that had equity in the lower end buy in the middle. We're seeing a lot of investors that have equity buying properties in the middle. And when we look at which segments of the market are most active, the lower end has seen a 3% increase. The middle's seen a 3% increase in the last quarter, and the upper end has received a 2.1% increase. This is the CoreLogic price segment indexes. So both the middle and the lower are growing strongest in Perth, and that's definitely in line with what I've been seeing and telling you. And it's interesting because when we see where the markets are most active in Adelaide and Brisbane, it's the lower end of the market that's growing strongest still. That makes sense because their markets are further along than us and affordability is starting to bite. And so people are most active in the lower ends. any investor activities in the lower end mainly. And then when we look at Melbourne and Sydney, most of the activity seems to be in the middle, and the middle of their markets is what's driving them strongest. So when we take a look around at the rental yields that are on offer, Darwin is still the strongest with a 6.4% rental yield. Then Hobart 4.4, Perth with 4.2 has this third strongest in the nation. And I think that's why we're still so attractive here in Perth when we compare Adelaide 3.7, Brisbane 3.6, and Melbourne 3.7, and then Sydney 3%. Just makes it that little bit extra more affordable to come into Perth still. And that's going to change as house prices outgrow, probably increases in rental prices, and will drift more down towards that 3.7 sort of figure probably over the next year or two. Now, let's take a deeper look at the factors that are affecting our market. And I wanted to start with finance because it's usually a big driver of availability of money that's out there. And we had a interest rate reduction in August, we had one in May, and we had one in February, all 0.25% changes. So that's really adding up to helping more people get in, and it's more affected the confidence factor that people aren't going to see further increases in interest rates, and has made them, comfortable that it's now headed the right way. At 3.6% cash rate, we're nearly within that longer term neutral band, which is the 2 to 3% band. Another 0.6% would get us there. The actual rates on offer with the banks are between 5.25 and 5.75%. So if you're not within that sort of range, I'd be looking to refinance or ask your current bank if they can do better. The ASX futures is predicting a 0.5% decrease further to rates over the next year. So not as bullish on further on too much more of a decrease, but a 0.5% decrease would take us to the top edge of that band where we've historically sort of seen the ideal interest rates sit. So interesting to see whether we see another one before the end of this year or whether we're done with that. But I guess we'll have to see what happens to inflation and the overall economy and how the RBA decides to pull this big lever of interest rates.
Just real quick before we continue on with the episode, are you getting my email updates yet? If you're not, you're missing out on our suburb intelligence reports, which we tailor and prepare for your individual suburbs of interest, showing advanced stats and insights. Must get onto those. And I also send out exclusive invitations to our events, including webinars, sundowners, and workshops. So if you're not getting those, head on over to investorsedge.com.au/join and make sure you're receiving my email updates.
So on to inflation. We're now at 2.1% in the year to December 25. So very overall low inflation over the last year. The peak we were at was 7.8% in December 2022. So you can see that the things that everyone's done to lower inflation are working. Last quarter, we actually had a bit of a spike on inflation at 0.9% for the quarter. And that was after 2 quarters previously to that, we're at 0.2%. So that got the RBA a little bit worried. They put a pause on any further interest rate reductions, just waiting to see what would happen. And then when we looked at the stats for the last quarter that have come out, we had a bit of a decrease down to 0.7%. So at 0.7%, we're likely to be within that target 2 to 3% band, and things are well under control there. So overall positive, I guess, for cost of living, prices and things. But we all know that just because the consumer price index for inflation shows that things are under control, the majority of households know otherwise. And things in real terms seem to be going up still by a lot more than just 2 to 3%. Now, when we look at the all ordinaries, the stock market's had a decent run since I came to you a quarter ago. I think that's on the back of people being a bit more comfortable with Trump, a bit more comfortable with where global things are going, overall confidence being there. And over the last year, we've seen an increase of 11.46% in the all ordinaries. So pretty reasonable increase considering that things were looking very negative not too long ago, about 5 months ago. Now, the iron ore price is pretty much drifting sideways, which I guess is good news for ongoing price of our main export. Nothing negative or overly positive to report there, so we'll keep an eye on it. Do go back and listen to my deep dive episode on population growth. I found some really interesting stuff to report on. But long and short of it is that over the last year to December 24, where we have the ABS data to, we had the highest population growth by percentage terms, still at 2.4%. When we looked at where that was really coming from, we were very strong with net overseas migration levels. And we were also backed up with interstate migration, really adding to that as well. So there's a big exodus from New South Wales. So a lot of people come into Sydney because they know the big landmarks, and then they work out just how costly it is to live there. And they come over to beautiful places like Perth and Queensland. So interesting to see that Perth is still doing so well. And if you go back and listen to the episode I did on population growth, the online search interest also backed up that we were the most popular place for people to looking to move or buy into state. So that was encouraging because that was up to the month data when I looked at it last month, whereas the ABS data is only up to December 24, so it tends to be quite outdated. Now, let's take a look at the policy changes and impacts. These are the big ones that are driving the first home buyers at the moment. We had a statewide increase to our price limits that occurred on the 20th of August. So Keystart now have raised its price cap to being at 800,000 statewide for its low deposit home loan. And so you only need a 2% deposit, but you do need to qualify with the income limits remaining unchanged. And they have their shared home ownership home loan up to 660,000, where the government takes a stake and basically helps the affordability because you're not paying interest on the stake that they have. So these increases now apply uniformly across metro, regional, and remote areas. And it came about because they've got their dynamic review mechanism now tied into REWA's median house price. So that's good to see that that's working to keep the price caps in line with what's happening in the market and make things a lot more realistic for first home buyers to be able to get in. Now, when we look at the federal, we thought, we can't let the state have all the glory. The federal government has rolled out coming on the 1st of October. It was supposed to start on the 1st of January. They've rolled it out even earlier. They've got their low deposit home loan scheme. So that's where you can put in a 5% deposit, pay no lender's mortgage insurance. And from October, pretty much all eligible first home buyers can purchase a property with just that 5% down. There's unlimited places with no income caps. So that's different to the state Keystart loans. So there's no income caps to this. And the scheme will no longer limit the number of participants either. So just going free for all on who can qualify and how many they're going to do. And they've substantially raised the property price caps. So in WA, which we care most about, they're changing it from 600,000 to 850,000. So you can see with both the state level changes and the federal changes, it's really going to push the activity of first home buyers up to 800 and 850,000. And that's why when I said anything with a 6 in the front's going to have a 7, you can see that anything with a 7 in the front's probably going to have an 8 soon too. And that's really going to allow first home buyers to get in with incentives up to a higher price point. So, tips to survive and thrive in this market. Actions to consider. It's still good value buying, and we've got solid rental yields on offer, but you definitely need to be selective. So, I'd suggest, if possible, to push your budget to the middle or top end suburbs, which will experience, in my forecast, the most growth over the next 1 to 2 years. I'd also consider getting into a villa or apartment still if your budget is below the 700K price point, because these are still relatively affordable and undervalued compared to houses in some areas. Definitely get in touch with us for our buyer's agency service. You can't afford to go it alone in this market. And we've got our absolutely delighted guarantee. So if you don't feel you've gotten, that you're absolutely delighted with your experience, you can choose to pay us nothing. And there's no way I can offer better value and ensure that than that absolutely delighted guarantee. So get in touch and we can definitely help you if you're looking to buy an investment or a home in this market. Now, continue to increase rents when you can if you're an investor, and make sure you're paying the lowest interest rate. I mentioned those typical rates earlier. Reach out to your finance broker and get them to revisit that. I'd also consider getting a strategic portfolio plan if you don't already have one. Who's this for? Well, anyone that is wanting to actually grow their wealth and improve their life and do it in the most optimum way. So get in touch if you want to chat about what that involves and how it would look for you. And when we look at my crystal ball for the next year, I think rents are going to continue to increase over the next 12 months, expecting at least a 5% increase, probably more in line with 7%. I haven't updated my slide. Immigrants are still favouring Perth, so we're very attractive still, and that's going to keep pressure on the rental market. And when we look at local investors, they're still about and buying, making use of their equity that they've got. We've got more East Coast investors actually coming back again now that I've seen over the last month. So they're attracted to the yield still and are waking up to the fact that we do have more growth ahead. I'd expect a 10% growth on most properties under 900K. I'd expect a 10 to 15% on selective properties between the 900 to 1.2 million. And I'd expect 5 to 10% on the 1.2 million plus properties. And keep in mind, if you're selective, you should be able to outperform these levels if you're using evidence-based, data-driven approach. And we, of course, have our trifecta criteria where we try to look for the strongest and highest performing property over the short term using data prediction. And then we look at the fundamentals for the medium and long term, line those things up, make sure that we're buying the best property that stacks up. So I also wanted to tell you about our special offer. I've never done this in 17 years of having my real estate agency. We're giving away 12 months of free property management. It's valued at over $5,000. And we're going to really enable someone to enjoy the peace of mind that our service gives with stress-free property management. We've got, I don't know if you've ever checked this out online. We've got 5-star rated on Google with over 1,100 reviews. The team are amazing at what they do. We're one of the most award-winning services in Australia. So go and check out www.investorsedge.com.au/prize to enter and go in the prize draw to win a year's worth of free property management. That would be all fees, every fee free for a year. And this applies for either a new property that comes under management with us, or if you're an existing client, and even if you're not, if you refer a friend and they win, you'll also win a year's free property management, and that can apply to existing properties under management. So it's either for a new property, or if you refer a friend, it can be applied to an existing property under our management. Now, to get further help, if you do want a updated sale appraisal anywhere in Perth Metro, I handle all of our sales personally with a strategic approach to make sure that you get the best price. Check out investorsedge.com.au/appraisal. For property management, check out investorsedge.com.au and then click on property management and get a custom quote through there. If you're not already getting our suburb intelligence reports on your suburbs of interest, these are incredibly powerful, show all the deeper stats that you're not going to be able to find online. Head on over to investorsedge.com.au/join. And if you do want to check out what we can offer for buyer's agency and strategic portfolio plans, go to investorsedge.com.au/invest. I hope you've enjoyed today's market update. Love to get your thoughts on what you're seeing, and do share this with friends, like and review. I always appreciate comments, and get in touch if we can help you with your property journey. Catch you on the next one. Bye.
Just a reminder, the information discussed in this podcast is general in nature. As we don't know your specific situation, you should always seek professional advice before taking any action. For free market reports on your suburbs of interest and other helpful resources to grow your wealth, make sure you join my property investor update at investorsedge.com.au. perthpropertymarket.com.au/join. And finally, make sure you're a member of our Perth Property Investment Facebook group to be part of the conversation with other like-minded investors, get help to your questions, and get a feel for what's going on out there in the market. I'll see you in the group.